Good day, everyone. My name is Vin Maru from Financial Liberties, and today we have a special guest on our show. His name is Jesse Day, and he's from Commodity Cultures. Jesse, welcome to our show, and why don't you give a little background of who you are and what you do in the commodity space?
Well, Vin, thank you very much for having me on the show. Honored to be here. I run a channel called Commodity Culture where I interview investors, fund managers, company CEOs in the metals and mining space with a big focus on gold, silver, uranium as well. We talk about energy too. And I just get to learn a ton, love doing it. And the channel started off doing documentaries, so I've also produced several documentaries on all those aforementioned commodities, along with coal, natural gas, platinum, palladium. Those have been licensed by Sprott Asset Management to promote their suite of ETFs. I continue to make educational content with them on commodities as well. So yeah, that's my background in the commodity space.
Awesome. Yeah, Sprott's pretty interesting gentleman. I was covering him and his ETFs a while back. So for the audience that's new and doesn't know me, I have a background in commodities and I followed it from about 2005 to 2012. I was a speaker at conferences in Canada, a newsletter writer, and I kind of got out of commodity space for a long time because I saw the bear market coming then and started focusing on other things, cannabis sector in particular, and now crypto, blockchain, but back into commodities because I actually think we're at an interesting point in time where we're going to see this whole new commodity boom. And you look at the price of gold right now, and most of the commodities they're pretty high. So gold's sitting close to all-time highs. It's in that range. So this is why I just wanted to start covering the commodity space and trying to layer that with what I see happening in the fintech space and how it's going to become kind of a new digital asset class going to be set up with commodities. But obviously, you're focusing on commodities itself. You've had some great guests on your channel, so let's just dive into it and kind of give us a bit of a global perspective on what you see happening in the world, with the U.S. dollar, but Western countries, BRICS, and how this change we're seeing globally is going to affect commodities. And we'll talk about it for about 5 minutes, then we'll actually get into the actual individual commodities themselves.
Yeah, big question to be sure. I think the BRICS versus the West narrative is very real and it is unfolding perhaps a little bit faster than a lot of people anticipated. We've seen a number of events, recently after the Ukraine-Russia conflict began that are leading to a bifurcated world where we're seeing Russia, China, Iran, India, who was kind of sitting on the sidelines and sitting in two seats at the moment. But we did recently see Modi visit Russia and Putin award him with one of the highest honors in terms of a medal that can be given to somebody in that country. So very interesting. We're seeing the Chinese military conducting drills with the Belarusian military on the border of Poland. The list kind of goes on. Putin announcing that the BRICS is working on an alternate payment system to evade sanctions. We recently saw frozen uh, Russian assets being given to Ukraine by the European Union. I mean, the situation is only getting more antagonistic from the Western side, and I think that's only going to bring the BRICS side closer together. However, through all of that, I think there is a lot of hyperbole being thrown around that the death of the dollar is imminent, that the BRICS nations are very rapidly going to put together some sort of gold backed or commodities backed currency, and that's going to spell the end of the dollar. There is very real data out there of these countries divesting themselves of US treasuries, China in particular. But things take a lot longer to play out than people think they will. So while all of these things are true, it doesn't mean that they're going to happen anytime soon. So I believe that over the long run, the US dollar is going to be challenged. I think there could be a monetary regime change where we see gold being brought back into the picture in some form or another, whether that's through blockchain technology as a digital form of gold, with real gold in reserve as backing, whether that's the BRICS nations using some sort of gold-backed currency to trade with each other, um, or any other number of ways. I think gold could be a piece of the puzzle. I just don't think it's imminent. And I think the US dollar has a lot more resilience at this point in time than maybe a lot of people are giving it credit for. So that's kind of my view on the overall picture. In terms of commodities outside of gold, we're seeing a trend now of onshoring of resources. We're seeing what many are calling deglobalization, where countries are starting to want to look out for their own interests when it comes to these vital natural resources. At this point in time, China controls so much of the critical minerals and commodities market in general, especially in terms of processing when it comes to a lot of these battery metals, when it comes to solar panels, in terms of the European Union and Western politicians are very much behind this whole new Green Deal, the new green economy, as they're trying to call it. I think there's a lot of inconsistencies with that whole thing coming together. However, it cannot be doubted that they're moving forward with a lot of those initiatives, and China controls a lot of those minerals. It controls a lot of those resources. So I think it's going to be a very fascinating time. I think we're going to see a more of a drive for domestic production of commodities in places like the United States in regards to commodities such as uranium, for example, which at the moment they're heavily reliant on imports, despite having 18 to 20% of all their electricity come from nuclear. So I think we're going to see more onshoring of resources. I think this could create, more soft conflict between countries, in the sense that everybody's scrambling for resources, realizing, hey, we can't necessarily rely on other countries. I think that is going to push prices higher in the long run.
Absolutely. And I mean, we're starting to see a lot more conflict going on with Russia right now and US backing. So, I mean, if the wars get escalated and now it starts going into Iran, which could be a possibility with Trump coming in, I think the demand for commodities is going to continually increase as a result, because now there's going to be the destruction and then the rebuild of regions and nations after that. So, yeah, I think we're kind of at the early stages of a stealth commodity market. I think that's how I see it right now. And the fundamentals do line up for the precious metals in particular to go higher, just because of the geopolitical events that are going on in the world right now with BRICS nations and kind of putting up a stance against the Western nations, and just kind of not even I don't think they're even trying to get into a physical conflict with the West. It's just they want their independence to build their economies the way they see best fit. And if you start to see more African nations enter BRICS, which I suspect will happen, you got these countries that are rich in resources that they should really just pull those resources out of the ground and start building their own national infrastructure, their own economies. And that's what I actually look forward to going forward, is watching these countries. And I live in Mexico. It's Latin America's rich in resources, and it's a great mining jurisdiction overall in some of these countries. But I can see a trend where these emerging markets are just going to continue to demand more and more commodities as they continue to grow out and develop. And India is another one. I mean, 1.4 billion people is probably one of the best fundamentals in the world for building the next superpower economy, just based on the demographics that they have. So it's an interesting time. And yeah, I mean, you commodities, I think, will continue to rise, and I'm sure you agree with that. So how about we dive right into some of these commodities? You talk a lot about gold and silver, and that was more of my expertise back in the day, in the gold market in particular. So why don't we start off with gold and silver as a monetary commodity, as well as a base and industrial use commodity, and then we'll get into some of the other commodities that you think are have lots of potential going forward.
Sure. I think for gold, obviously the industrial use of gold is quite small. So from the market perspective, I think it's being viewed mostly as a monetary metal at this point. I think the incredible, reckless levels of government debt that are rearing their ugly heads, not only in the United States, but across the world as well. We're seeing countries like Egypt and Kenya take on massive IMF loans, look to Japan, the highest debt to GDP on the planet. Um, there has to come a point where this train stops. And like I said, it can take a lot longer to play out than people think. But there's a reason that central banks around the world have been accumulating gold at such a rapid pace recently. One of the reasons is because I believe, the freezing of Russian reserves, not only that, but now they're redistributing it to Ukraine. That type of behavior um, now makes it so that the US dollar and US treasuries are no longer that safe haven asset that a lot of countries used to think that it was. We're now seeing those countries move to putting gold on the balance sheet as kind of the new preferred low risk asset, because as long as you're holding it within your country's borders, within your jurisdiction, that's your money, and nobody can come and seize it outside of a military invasion. So that is the safest form of money that you can have now. Obviously, it's not as transactable. I think what you were speaking about earlier when it comes to the digitization of all of this, and what maybe BRICS and Putin was alluding to when he talked about an alternate currency system, is a way. We've seen this already with some applications that digitize gold and silver, where they store it in a vault and you can buy it online at a low premium. I think perhaps similar sort of blockchain technology could come to pass, so that these countries are actually able to transact more freely with a commodity like gold. There's just so many drivers working in gold's favor right now. I think the most valuable thing from an individual investor standpoint when it comes to gold and both silver is simply the ability to store your wealth outside of the financial system with no counterparty risk. I think that is one of the most beautiful things that there are. And when we talked before hitting record on getting red pilled on sound money, and when I had that moment and I realized I bought my first silver coins, and I realized, like, wow, this is money and it's not in any bank. Nobody has a claim to it. Nobody even knows I own it. It's literally my own wealth. So I think that's a really powerful thing, and anybody approaching the gold and silver sector should look at that first. Like that's kind of the basis on which everything else is formed. If you then want to speculate on mining stocks, etc., I think having bullion and taking control of your own wealth is very important. When it comes to the case for silver, it's super fascinating because obviously it's one of the most used industrial commodities on the planet. So it serves kind of a dual purpose. I've talked to some people who believe that silver's monetary aspect is over. It's strictly an industrial commodity. I don't completely agree with that, but obviously central banks aren't storing silver. Silver is not seen as money in the way that it used to be in many places. Obviously, different cultures, you mentioned India, still view silver as money, China. But in the West, it's less associated. So I think ultimately, the monetary investment demand for silver will be driven by people seeking sound money who can't necessarily afford to stack gold.
Right.
And so, people call it poor man's gold for a reason. And then on the industrial side, I mentioned the new green revolution, whatever you want to call it, this so-called electrification of the world. It's not going to work out like the political elites think it will, in my opinion. However, they are pushing forward all these agendas. You need a lot of silver for solar panels. I've spoken with David Morgan on my show, Andy Scheckman on my show recently. They both pointed out the amount of silver's use in military use, whether it's missiles, whether it's defense systems, all of these different things. Silver is widely used in all electronics. And so that's going to drive demand, unfortunately. And I think emerging economies, when it comes to all these commodities, but particularly silver, because of its role in electrification, you don't need to look at the new green economy to be bullish on that. You only need to look at emerging economies where you're seeing a new middle class come to the forefront. You're seeing people go from poverty into middle class in places like India, in places like Indonesia, in China, that continues. So you're going to see more people wanting access to air conditioning, wanting access to televisions, computers, phones, all of these types of things. So I think the demand for silver will also be driven, copper as well, by these emerging economies on the industrial side. So I'm super bullish on silver. Silver is one of those metals that people stack a whole bunch of it and they get really emotional about it, and they scream and moan online about how it hasn't done anything.
Yeah.
But you shouldn't put all your wealth in silver. Like, that's insane. There's people who do that, who are just so emotionally connected to it. You need to take a step back. First of all, physical silver isn't an investment. It's a way to store your wealth outside of the financial system. If it goes up, great, but you know, I hope to never sell my silver. But when it comes to the price of silver, there's obviously all the talk out there about manipulation. It is a manipulated market. However, supply demand fundamentals eventually have to come to the forefront. Again, continuing on that theme of things take a lot longer to play out than you think they will. And at that point, I believe we will see a higher price. You get all these predictions. People tell me silver's going to 50 this year. I just spoke with David Hunter, brilliant man. He said silver's going to 75 this year. Okay. Um, we've heard it all before. I mean,
Exactly.
just if you're stacking silver, hold on to it. It's not an investment, it's more of an insurance policy and a way to store your wealth outside the system. I think silver miners, there's very few pure play silver miners out there. I think that sector could definitely go parabolic at some point, and I think we will see the silver price rise over the next several years. I just don't, anything's possible, but I just don't see it as this silver's going to just run to $75. I think it's going to be more of a slower ascent as the industrial demand side really kicks in.
Well, my thoughts on silver is following. You mentioned manipulation. I spoke about gold and precious metals and manipulation a long time ago. Silver short concentrations, that sort of thing. So my thought on silver is this: you have a certain cost production, whether it's byproduct from other mining, but there's a cost to produce silver and then bring new silver online from the miners. Then there's obviously a certain percentage of profit that the miners would like. So that's your kind of your floor price on silver. And whether that's $22, $25 based on the actual cost of mining from that, that's your floor price. So I suspect we're not going to go back to $15 silver price again. Could it go back into the low 20s? Possibly, if a global slowdown happens in general. My only thing would be is for silver to really break out above 35 and go to that next level to take out the 50 target that we saw the last run, and then even higher. There has to be a short squeeze in the silver market, or some sort of major geopolitical event that's going to drive everyone out of fiat and into metals. And then the narrative around, silver being poor man's gold will play out. And that gold to silver ratio will, come back to a historical norm of, I think it's about 15-1 of silver in the ground compared to gold, or even maybe a little less. But I think in the last bull cycle, we saw silver go down to about 30-1 on that, the gold to silver ratio. So again, I don't suspect we're going to see much higher than 35 unless there's a triggering event that's going to cause it to go parabolic. And then if that does happen, sure, absolutely. Anything's possible in terms of a price range. Could go to 100, 150. Who really knows, right? Especially on a silver short squeeze. But the way the markets are manipulated, I think that short squeeze is only be a very temporary thing. And they're not going to allow it. The Huns tried it back in the day, and look what happened to them. So I think it'll be a very short narrative. And I mean, it could be a 1 or 2 month window where it just goes crazy parabolic. Great if you're in the trade and leveraged on it. But other than that, I mean, and even with the gold price, I just kind of see it as a certain range bound right now. But the long-term fundamentals for gold will continue to rise as you see more and more people diversifying and wealth increasing in these various countries that you mentioned. So it's great that we've covered gold and silver. What do you see on the forefront of some of these other commodities? That you mentioned electrification of the grid, which will always put in demand for that. But Trump is now talking about drilling, and so going back to oil and natural gas. So how about we start off with energy, natural gas and oil, and then we can get into some of the other base commodities that you like.
Yeah, I'm a huge bull on the energy space. The majority of my portfolio is in oil and gas stocks. I think it's just been so underinvested in for the last 10 years that these companies are paying down debt, they're returning capital to shareholders, they're buying back shares, and they're still very cheap. I think the oil and gas sector has been left behind, has been left for dead by a lot of large institutional funds because of ESG mandates and because it's no longer the cool thing to do. You got to invest in green energy. I think that's going to eventually, we have or have already seen signs of capitulation um, on that front. So I think going back to the theme of emerging economies and a new middle class coming to the forefront in those countries, they're going to need hydrocarbons more than anything. I mean, these countries aren't going to suddenly power all of this with solar or wind. Nuclear is another big story. Uranium is my second largest position. But you can't bring nuclear online quickly. It takes a very long time and a lot of money to build a nuclear plant. So countries like India are building out nuclear. A lot of countries around the world are doing it. UAE, I mean, Japan has a bunch of reactors it's turning back on. Korea is now, really committed to the nuclear story after having a previous government who was very against it. They've done a complete 180. I mean, the list just goes on and on. Here, where I live in Serbia, they're now talking about building a nuclear power plant. But these are things that take a very long time. And so, in the immediate future, as we watch these emerging economies advance and the citizens look to get a greater quality of life, that is 100% driven by hydrocarbons. So I think people are very much underestimating the demand for oil. They think it's going to go down, or maybe it's already peaked, or it's going to remain flat at best. I think that it's going to rise a lot moving forward. Now, of course, we could see a global recession, but even in a global recession, you're not going to see a massive slowdown in oil consumption to the level that people believe. The other narrative that is working against oil is the electric vehicle narrative. I also don't think that we're going to electrify the world's vehicle fleets. I think that we're going to see internal combustion engines be the dominant form of vehicle for a long time to come. Hybrids are interesting. I think that might be something that is maybe more realistic than electrifying full EV everything. But nonetheless, at least for the next decade plus, I see oil and gas being great beneficiaries of this emergence of a new middle class. Uh, Natural gas is also very clean burning. It's one of the best energy sources around. It's the natural gas market's very interesting and extraordinarily complicated. I don't pretend to understand it. I mean, I speak to people who are experts in the energy sector, and they tell me natural gas is so difficult the market's so difficult to wrap your head around. It's priced completely differently depending on where you are in the world. So that's really interesting. The whole LNG terminal build out in the US and how that is a huge part of the puzzle. So I don't try to predict prices. I just believe that we're going to need a lot more energy. The world's going to need a lot more energy moving forward from hydrocarbons, both oil and gas. And I expect that trend to continue and to rise moving forward.
Yeah, I followed natural gas and oil a little bit, but natural gas. And uh, I was looking at it a little while ago this past winter, and I'd seen some reports and other analysts talking about $4 per BTU and stuff like that. And at the time, it was kind of 250, 280-ish or so like that. All of a sudden, we didn't have as cold of a winter, and I saw natural gas drop to like $1.60-ish per BTU. And I was like, well, what's going on here? But I guess it really comes down to supply and demand on this thing. And, whether there's excess supply, the price is just going to fall. Now, I do think you're right that pricing for natural gas seems to be varied among different countries, but the US seems to have the lowest price of natural gas globally. And I don't know if their plan is to build these LNG facilities and start exporting natural gas out of the Gulf there. My suspicion is if Trump does win, he's going to actually push for a lot of that. And so we could see this whole natural gas build out of infrastructure. And I live in Mexico, and there's a lot of demand. Natural gas does come in from the US because it's refined there. There's no refining capacity here in Mexico or storage facilities, but there's huge demand for infrastructure build out here for these storage facilities. So my suspicion is you kind of seen what happened with the Russian pipeline and cutting off some oil supplies to the European market. Whether the US had militarized this and weaponized their powers to take control of the oil and gas sector, we can speculate all we want, but I mean, it does seem to be an interesting narrative to look at because now the US is one of the bigger producers of oil in the world and natural gas. So my suspicion is that Trump wins, you're going to see that whole sector blow up in the US. It's going to do amazingly well. if Kamala Harris wins, yeah, I'm kind of indifferent on it. I don't think, I don't see her as an economy builder more than kind of, she's got her own views on things and stuff like this. So I really kind of question what's going to happen with the economy in the US if she wins. I don't think it's going to do as well as if Trump had won, but we'll see how that plays out in that. But yeah, it is interesting. I do follow natural gas a little bit, but I try to follow all commodities in general. So that's great. Anything else you want to talk about in terms of commodities in general or the emerging markets before we kind of move on to the next topic?
I'll just touch really quickly on uranium, as I mentioned it momentarily there. I think that there's a massive opportunity in the uranium sector right now. We've seen the equities as well as the spot price of uranium take quite a beating recently. I think the long-term fundamentals are extraordinarily solid. Supply demand, everybody's heard it ad nauseum, but there just is not enough uranium to fuel all of the reactors currently in operation, under construction. Everybody's pivoting to nuclear. Once again, the thesis can take longer to play out than you think it will. So I see a lot of people these days whining on Twitter about my uranium stocks are down. Why isn't the thesis working? That's not how it works, guys. That's
Yeah.
not how the market doesn't work as you want it to. Not only that, but you're kind of discounting the fact that people who got into the sector in 2016 have made a ton of money already. So just because you jumped in when Sput first got released and the whole market was screaming and you thought it was just a straight shot to the moon, just because you got in then and now you're crying because your junior explorers that'll never make a discovery are down. You gotta realize, look at the long-term thesis, be very conscientious of your company selection. There's two major producers and there's a few companies now in the US that have started producing. So I would look to those. I would look to an ETF, either the URNM or SPUT as a way to just play the whole sector. But I think that uranium prices are going to go much higher over the course of the next several years. How long, nobody knows. So don't invest money that you can't afford to lose, and be smart about it. But I think at the end of the day, I got to get that off my chest because I'm seeing all these people whining about uranium on Twitter these days. It's a long-term game. Keep your eyes on the prize. The thesis is as intact as it ever was, and I think uranium will have a lot of strength moving forward.
I agree, but I think what's going to happen is this whole narrative around electrification of the grid, solar, all of that has to almost collapse. And then the realization comes, well, we can't leave the uranium and the nuclear industry. It's the cleanest energy form out there, the cheapest. So why did we even go down this road of green energies when the best energy source was uranium around the world? And there's other ways to play uranium. I'm sure you could look at the miners and stuff, but the major construction companies that are building these uranium plants, if we start to see more narrative around more and more nuclear plants being built around the world, I mean, that's a safer play maybe instead of speculating on a uranium junior, whether they make a discovery and can actually bring it to production, or you focus on the seniors. And I've been in the juniors market back in the initial commodity boom. It was different then because you had a speculative play around the juniors that did well. But in this cycle, I suspect it's not going to play out the same as it did the last cycle. And right now, I just see speculation around all these cryptocurrencies and the fintech and the digital token and all that. And I'm interested in it. I love it. I think it's going to be a big trend moving forward. And so just give me one sec. But I do believe that there's going to be this cross between commodities and this whole digital asset tokenization. All of this is going to come together at some point. And I think that starting point is right now. So we may actually see, as the narrative around cryptocurrencies and tokenization of assets and this whole digital trading asset platforms get built out, but then the realization, well, we need the building blocks of commodities that build societies and nations and infrastructures and all of this. And it migrates into it. And now it's way undervalued compared to some of these Bitcoins that could go wherever. Then you're going to get that narrative come into it, I think. And that's where I really start to see the whole commodity cycle take off again. Until then, I think it's the spotlight hasn't been on the commodity sector and the miners in general. But at some point, the market's going to have to realize, well, these are the real building blocks. It's not your Shiba coin and your thousands of crypto pump and dumps that are out there. Now, I do believe there are some crypto that are going to do very well. And I'm glad we're now kind of discussing into it. It's the last segment that I really wanted to discuss. Bitcoin ETFs have started coming out. That's interesting. They're talking about other ETFs very soon. But what I see happening out of all of it is I suspect there's going to be about 10 to 15 of these crypto utility tokens that are focused on certain niches and use cases. They're going to be the ones that you got to really focus on. And I actually had a great interview yesterday that I'll be posting online later today about XRP and how RippleNet and how it's being used by central banks. And I think that is going to be the blockchain, the technology, the XRP is going to be used as that intermediary global transaction mechanism and utility case. So I'm very bullish on XRP, but it's not going to be one until you actually get central banks adopting it and starting using it. They're just kind of in the sandbox testing phase of all of this and building it. But it's one of the ones that I do think it's going to do very well as some of the others. But yeah, if you want to share your thoughts on Bitcoin or some of this other stuff, or in particular how you see commodities meshing and getting developed out with this whole blockchain, crypto, digitization of assets, and how the commodity sector will play in that narrative that's getting built.
Well, I think it will be very interesting to see how the BRICS nations advance with this alternate payment system and if this will be a part of it. Because we've heard about gold backed, we've heard about potentially commodities backed. So if they're able to use blockchain technology to back this new payment system with actual hard assets, that could be a very interesting development that could push that side of the industry forward. When it comes to Bitcoin, I'm a purist when it comes to the crypto space. I'm Bitcoin and nothing else. I'm self-custody only. Don't buy the ETF would be what I would say. Self-custody your own Bitcoin. That is another way. That's the only other way besides gold and silver to remove your wealth from the financial system and take it into your own hands. It has superior characteristics in some ways. There's an interesting war that goes on online between Bitcoin holders and gold and silver bugs, and it's the most useless thing ever. They're always arguing back and forth online about which asset is better. There's very few people out there who believe in holding both. I'm one of them. Lawrence Lepard is one of them. William Middlecope, Ronnie Stofferly. There's some of us out there, but for the most part, people are either one or the other. Oh, Bitcoin's superior because of this. Yeah, Bitcoin has some superior aspects. One of them being storage. You don't need anything to store it. In the most extreme example, you could memorize your seed phrase, which essentially is the access to your Bitcoin, and you could travel around the world without even carrying a cold storage wallet and have your Bitcoin be secure. In the extreme case of having to flee a country and all your assets are getting seized or something like that. So it can't be seized, unlike gold and silver. Portability, it weighs nothing. So like I left Canada to move to Serbia in 2021. You mentioned you moved to Mexico. I moved to Serbia around that same time. And I had to sell some of my silver because it was just, I can't carry all this silver around going across the world. So, and I bought Bitcoin with the proceeds because that's just another way to store your wealth, and it's extremely easy to carry around. So there are some superior characteristics to Bitcoin as opposed to gold and silver. It's a much more speculative asset because it has such less history. The gold and silver is thousands of years as money. This is one of the gold bug arguments. Bitcoin just came out essentially yesterday in the span of human history, so it's not proven. I would concede that that is true. So I'm way overweight Bitcoin. It's my largest single holding. That's simply because it's the first thing I invested in, and it was kind of my gateway to gold and silver. For a lot of people, it's the other way around. For me, I discovered Bitcoin, and then I've found gold and silver, and I kind of got into the whole sound money world through shout out to Mike Maloney's Hidden Secrets of Money. That was one of the great documentary series that really opened my eyes to all that. So I'm very bullish on Bitcoin. Um, I'm not in the camp of it's going to be the new currency. It's going to go to Michael Saylor, who these Bitcoin guys are kind of, they don't represent the Bitcoin very well. They say all these hyperbolic things, and it really, that also turns off the precious metals people a lot when they hear people like Michael Saylor come out and say, sell your house and buy Bitcoin, and Bitcoin's going to 30 million as a base case. High is 75 million. It's just, don't just be realistic about it. But I'm very bullish on the future of Bitcoin. I think it will go a lot higher over the next several years. I think it's a fantastic way to once again take your wealth outside of the system. We have seen El Salvador adopt it as a currency, and you can actually use it transactionally throughout the country. I think that's being very understated or ignored by people. They just think, oh, that's ridiculous. El Salvador is just a nowhere place. Who cares what they're doing? I think that's extremely significant, and people should look to that and understand that eventually. I mean, we just saw Donald Trump and RFK Jr. speak at the Bitcoin convention, right? Which,
Uh,
by the way, Donald Trump doesn't know a thing he's talking about when he opens his mouth about Bitcoin. It's embarrassing
yeah.
when he gave his speech. It was just basically trying to garner votes from the Bitcoin crowd. RFK Jr. does understand it. I don't think Donald Trump owns a single Satoshi. I think he's just placating the Bitcoin crowd to try to get a vote. Um,
Well, did you
I think
see what
RFK understands it. Yeah.
I was just gonna say? I saw a video of RFK at the Bitcoin conference talking about how they want to accumulate like 4 million Bitcoin. Like that price is
Yeah.
gonna skyrocket. So I put
Now
it online, but
that's also unrealistic. I mean, let's face
yeah,
it. I think that's unrealistic as well. But at least RFK gets it. The unfortunate thing is, I don't think he's going to be the next president. But at least Trump, despite not understanding Bitcoin, at least seems favorable to it from a legislation, from a regulation standpoint. So I think it will be overall bullish for Bitcoin if we see a Trump presidency.
perfect. Well, I think we'll have to wrap up this interview. Thank you, Jesse, for coming on. Is there any contact information you'd like to share? Please, give us a shout out, and thank you for coming on.
Yeah, thank you very much for having me. You can reach me on Twitter at Jesse B. Day, and you can find me at Commodity Culture on YouTube, where I do 2 to 3 interviews a week with experts in the commodity space. You can just search Commodity Culture on YouTube and you'll find me.
Perfect. Thank you again, Jesse, for coming on to our show. And I look forward to speaking to you again about gold, crypto, Bitcoin, all of it, and how especially when the digitization and tokenization of the commodity sector starts to evolve more. It's something I'm going to be following quite a bit, is because I'm trying to mesh that the commodities platform, but the whole digital asset space. And the only thing I can say about it is, with this whole Bitcoin maximalist and then the precious metals, I saw that back a while ago, and I said they should back Bitcoin by gold. Or if there was some token that did that, it would be great. But we'll see how this all plays out, and we'll talk soon, Jesse. Thank you.
Thank you.
Take care.